Welcome to Brick by Brick, Building Wealth Through Homeownership. I am Kim Von Dohren, your realtor.
And I'm your banker, Ed Marko.
So today we're going to talk about renovation loans.
Yippee.
So I think we need to start with, though, explaining what is a renovation loan.
Sure.
And who uses them. Are they for investors? Are they for owner-occupants? Who uses renovation loans and what are they?
So, yes, both types of people can use a renovation loan if they can find a renovation loan that fits their needs. The type of renovation, there's all kinds of renovation loans. The one that comes to most people's minds are, oh, I own my house. I want to renovate my basement and add 2 bedrooms. That's one type of renovation loan. That's not what I want to talk about today. I don't think that's what people want to hear about today because that's been around forever. I think what you want to talk today is a 103K and loans like that. Is that correct?
203K?
203K,
Yep.
sorry, 203K.
Yes.
Yeah.
Yes. So a renovation loan is something where you purchase a property and you're going to renovate it before you move into it.
Right. So this
That's
is a
the type.
purchase renovation loan,
Yes.
all in one.
Yes.
So you're going to be able to get a mortgage that helps you buy the house, and there's enough money left over to complete the renovations in the home to get it up to living standards, to get it where you want it to be. So you can do this with an investor or somebody that's going to live in the house. It's going to be their home.
If you use you can't use the federally funded ones. The 203K, we should specify,
Yes.
is a federally funded loan.
Correct.
And those are owner-occupant only. And those have been the ones that have been traditionally around for the longest.
Correct. They've
Yes.
been around for a while. People that use them are almost unanimous in saying it's a very difficult process. You've got to get a federally approved contractor, subcontractor. There's going to be inspections done just like if it was an FHA loan. There's a lot that the builder has to go through, or at least that they think they have to go through. There's some forms they need to fill out. A lot of builders are adverse to doing that because they're all afraid of the federal government getting in their business. So it's a difficult, slow-moving, hard process at best, has been my experience.
Yes. Yes. And there's two. The 203K loan there's 2 types of loan that they do. One is a small loan where you get, and I think they may have just raised these numbers, but you could get $35,000 to do the renovations on top of the purchase. And then the larger one, which had a lot more restrictions, limitations, and requirements, that one you could get a larger, significantly larger amount of money. And because I don't know those numbers off the top of my head, I'm not going to guess.
So I'm going to talk about the larger one, and then compare it with what else is out there in the marketplace.
Okay.
So when you're looking at a 203K, this is what the buyer has to go through. And the buyer has to do a whole lot of legwork, extra legwork up front. So what you have to do is you have to find the property that you want to buy, and then you've got to get in an approved contractor to come in and let you know how much they're going to charge to make all of these repairs on the house. And then you take the house and the agreement from the seller, when the seller says, okay, I'll sell you that house, and you take the cost of all of these repairs and what's going to get done, and you hand that to an appraiser. The appraiser has an imagination and says, okay, once all of these repairs are done, this is what this property will be worth. And then you're going to go back to the underwriter, and the underwriter is going to say, we're willing to lend this much money based on the finished product. And that's the amount that you can borrow. So let's say it's a typical, most of the time people want to put as little money up front. Let's say it's a 95% financing. So you've got a house that you can buy for $50,000. You've got $75,000 worth of repairs that need to be made. You're going to have a house that's worth $100,000 when it's finished. Theoretically, you can borrow $95,000 to get this done. So you've got enough to buy the house, you've got enough to pay for your project, and then the rest of it can go towards closing costs. but you still need to have that 5% down of that $50,000, even though you can borrow more than that. They're only going to let you borrow up to the finished project, less closing cost, less your 5% down of the purchase price of the base property. Does that make sense?
Absolutely.
Okay.
Hmm.
So so that's the way that works. Then once you've done that, that extra, in this case, it would be an extra $25,000 roughly, goes into an account. And as the construction goes on, they're going to pay out through different stages, usually only 2 or 3 times, if that many times, to the builder once X amount of the project has been finished. Let's say it's a $25,000 project. They're probably only going to pay 2 times. They're going to pay halfway through the project. They're going to pay them half of the $25,000. And then upon completion and you receiving your occupancy permit from whoever the governing body is in that market for an occupancy permit, that builder is going to get the balance of their money, just like they would if they were building a house or doing a traditional, we're going to remodel your basement.
Hmm.
So it works exactly the same way. Once that's done, this turns into just a regular, as an example, a regular 30-year fixed rate mortgage. And
Okay.
you go about your business like nothing ever happened.
So that process doesn't sound that complicated, at least not to me.
Mm-mm.
So why not use one of those 203K loans? Because as a realtor, I will tell you, I have done one in 12 years.
Yeah,
So that's not very many. And I know most realtors haven't done any at all. There are reasons for that.
right.
So why, if the process is as simple as you just made it sound, why don't more people use them?
So I think the big word there is it's federal. So anytime you get the government involved in people's business, it's concerning to people, particularly builders. They're all self-employed. So they're, although this is probably imaginary, they're afraid that if they go through the process to get certified to actually do these jobs, that's going to open them up to other government entities like maybe the IRS.
Okay.
So that's part of it. The other part of it is you're going through the whole alphabet part of lending. So whether it's FHA, VA, in this case, the 203K, all of these different, you're dealing with a branch of the federal government and they're slow movers. They're not in a hurry. They don't care about your contract date. None of those things really matter to them. They also require that you use a contractor.
Hmm.
So that means that you can't do any of the work on your own.
Right. And
So,
nothing outside of the scope of what is agreed upon initially. So if they
correct.
say the renovation is going to include the floors on the main living level and the kitchen, and that is all, if you wanted them to do something else, they're not supposed to do anything else,
Right. They're
correct?
not allowed to do it until the contract is completed. They could come back later,
Right.
and
But
then you,
not
you can
as
pay them out of
part
your
of
pocket, but they can't, it can't be part of.
and not during.
Right.
Right.
Right. Exactly.
And
Exactly.
that brings me to the other question is there's a time constraint. I recall there were two things that were hurdles for us when we did ours.
Mhm.
I say our meaning my client and myself. We struggled first and foremost to find a contractor that was approved by the federal government.
Yeah.
And the process to get approved didn't seem very difficult, but nobody was really interested in being bothered. And we just could not find anybody who was willing to do it, especially within the time constraint, which was the second piece that was the hurdle. Was there is only a certain amount of time that you are allotted to complete the renovation, and then the settlement must occur. And I want to say it was 3 months. It wasn't long, which may seem long in the world of most consumers. 3 months, that's a long time. But if you've worked with a contractor, you know
Uh-huh.
that that may not be long enough.
Right. So there's two truths in there, right? So the first truth is that from the builder's perspective, these builders are so busy
Very busy.
to say to this builder that first, I need you to stop what you're doing and get this done for me in 90 days. Oh, and I also need you to fill out all these extra forms and get approved. Like no builder really wants to go through. They've got enough going on. Bef- they just don't want to be
Right.
bothered with this extra nonsense. And then the other truth is getting it done in that short period of time, most of the time is nearly impossible. You've got to find a builder that is willing to drop everything and do this for you. which means you're probably going to get a newer builder that doesn't have that much experience, knowledge, or customer base that they're worried about. So that's where the big problem lies with that product. I'm not saying it's a bad product. It's actually a great product.
It's quite innovative,
Yeah,
but
it's so great we copied it.
right. So there is so banks,
Right.
yours, for example, is
Yes.
one,
Yeah.
and that's not an endorsement, but we are just saying that there are banks now that said, "Oh, obviously there's a need for this loan."
Hmm.
So they've created one for themselves. So you can offer a renovation loan, correct?
Right. So we have what's known as a purchase renovation loan, and it works almost the same way. Only we think, and all of our clients think, that we've removed all the obstacles. So
Yay.
yeah, right, yeah, exactly. So we'll lend like a conventional mortgage on it. You can borrow up to 95% of the value of the finished product. So that end of it's covered. And then w- two of the things that we've done that make it better, or we believe everybody tells us it's better, and we know it's better. And when you hear this, you'll know it's better. You don't need to use a contractor. You can be your own contractor. So if
Wait,
you're
so as a investor,
Mhm.
I can use this loan
Correct, yes. Yeah, this
and
isn't just for consumers. Anybody buying an investment property that's so inclined, we will lend to them as well.
so then as the investor, I can do the repairs myself.
Correct.
Okay.
Depending on what the repair is. So let's say that you're buying a house and the floors are all shot. It needs paint, and the kitchen is just very dated. So you're gonna buy this house, and you say to me, you need to convince me or someone like me, I can do my own flooring, I can put in my own kitchen cabinets and kitchen flooring, and I can do light plumbing. And I'm going to ask you a few questions to determine if you can do that. And if I'm convinced you can do that, it's not very hard to convince me because I've done those things. So I'm going to know if you know how to do them. They're not hard. None of those things require a license other than the light plumbing, maybe. It needs to fall within the scope of what the governing body where you're doing this will allow.
The
By governing
municipality.
the municipality, the township, the borough, whatever it is. But as long as you can do all those things, we're going to allow you to do them yourself. So what you're going to do with our product is or anybody else that has a product like this is you're going to find that house that you can buy for, again, for the argument's sake. We'll say you can buy this house for $50,000. You're going to go to Home Depot or Lowe's or wherever you're going to buy all of your supplies, and you're going to find out how much you need for flooring, how much you need for paint, paint supplies, all of this stuff. You're going to get this in writing from them. And they do this all the time. So it's not hard to
They
find
do.
somebody in there and say, this is what I want to do. I need an estimate on how much this is all going to cost. It's going to be a pretty seriously accurate estimate because they're going to tell you, do you need paintbrushes? Do you need drop cloths? Do you want a
Right.
little bunny suit to wear while you're painting so you don't ruin your clothes? Do you need goggles? Do you need a spray gun to paint your house? What else? They're looking to sell you everything you're gonna need,
Right.
which is good because you probably don't really know everything you need till they're done telling you what you need.
Mhm.
And my advice is listen to them and buy everything they tell you you need, or you're gonna run back and forth all day long, like I have in the
Mhm.
past.
I have too.
But at any rate, you're gonna get that in writing. Now all of that is gonna go to the appraiser, and they're gonna look at it and they're gonna say, "Okay, you've got $50,000 for the house, $10,000 worth of materials. There's going to be 45 or 50 hours of your personal blood, sweat, and tear going in here. That has value. We're going to add that to it. He's going to say, or she's going to say, when it's all said and done, this property is worth $100,000. We're going to lend you, if you're a consumer, you're going to live in this house, this is your primary residence, we're going to lend you up to 95% of that. If you're an investor, we're going to play by the investment rules. So an investor needs to have 25% down. We're going to lend you 75% of that. Regardless, in this illustration, you're going to actually have money left over. You can either use that to reduce the principal of the loan when it converts into a traditional 30-year mortgage, or you can take that and walk away. I don't care what you do with it. Go on vacation. It just doesn't matter. That was part of the value of the property after it was completed. When we see that it's been completed, that money is on the table.
Okay. Hit the brakes.
Mhm.
Did you say that I can pay myself?
Correct. Yeah, your time has value, and we understand that. So usually there's no money left on the table, to be clear. But from time to time there is. And under those circumstances, yeah, that's already been built into the equation. It's in the value. Your time, if you're doing the work physically yourself, has value and you can pay yourself. And that's whether you're an investor or a consumer, either way.
Is there anything in the scope of the renovation that would not be considered for the renovation loan? Like if it needs a new septic system, for example, like
Mhm.
is there anything that, or can anything that needs to be repaired, renovated, or replaced is on the table?
So anything can be on the table. There's a list. I shouldn't say anything. I can't think of anything that's not on the table, Kim,
Okay.
but you need to kind of go into this with an ounce of common sense. If you're looking at a home and the living room floor is kind of old and dated, but it's still serviceable, and you don't like the color of the paint, repainting the house and putting in a new hardwood floor or vinyl or whatever isn't going to have a significant difference in the value of the property.
Right.
So you can't really just use one of these to change the color of the paint. It needs to have value.
Gotcha.
But big things, all of the floors are shot. This house hasn't been touched since 1970. The septic system is shot, needs replacing, or we need to hook up to the brand new city water and sewer that's out front, and that's going to cost me $15,000. The roof is shot and it's leaking and it needs to be repaired or not even repaired, replaced. All of these big dollar items that would stop someone from buying a home in the past is going to have that kind of a real effect. That 1979 kitchen that's in good shape
Hmm.
is nice, but we all know that if that was brought into 2025, you might have $30,000-$40,000 worth of additional value in that property because now you've got a new and modern kitchen.
Right.
Those are the kind of things that you're looking for.
Okay.
You want to make sure that they're of real value.
So it does create more work for the consumer, though, because now they're managing the
Right.
renovation.
Mhm.
They're going to have to, assuming they can't do the plumbing repair, they have to hire the plumber and manage so now the consumer definitely has a lot more responsibilities in a transaction like this.
Well, they can. They don't have to. They can right from the very beginning say, I'm going to use Bob, the general contractor here. Bob doesn't need to jump through any huge
Who-
hoops. He needs to fill out a little form so that we know who he is and who to pay.
Okay.
But they could have a general contractor take care of everything for them. I don't run into that ever. I don't. This product, these type of loans are generally geared toward the person that wants to do it themselves and enjoy at the end of it that extra sweat equity, whether it's through reducing the amount of money that they owe on the property or walking away with that extra money because they do want to go to Spain,
Okay.
whatever. They feel
Is
like they've earned it.
Is it a portfolio loan
Yeah.
for your bank?
Yep.
Okay.
Yeah.
So a portfolio loan, just to share with consumers who don't know, means you hold it in house. It doesn't get bundled and sold on the stock market.
Correct.
That's the easiest
Yeah.
way to say
Yeah.
it. Okay. And so the next question is interest rates. How do they compare to a traditional 30-year mortgage?
So there's more risk involved. So they're generally a half a point higher, but at the end of the day, when it comes to this type of a thing, if you were looking at any other product, it's going to be at least that much higher. So
Okay.
it's very competitive, extremely competitive, I would say.
Okay. Yeah. Is there anything else you'd like to say about renovation loans? I think I did personally have an experience with specifically the 203K loan. I
Mhm.
have not had an experience with a renovation loan that's a portfolio loan with your bank or any other. And though it was challenging, we got it done.
Correct.
It was, as I said, there were those couple of hurdles, and it was very easy for me as a realtor. I Realtors, I think, are spooked about how difficult renovation loans can be, and it was actually quite easy because I wasn't really responsible beyond the settlement of the purchase of the property. At that point, it was on the consumer to manage the rest of the transaction with the lender. So, to the realtors out there listening, they're not as bad as you think they are. And there's more than just the 203K loan. There's also the renovation loans offered by your bank and others.
Right. So Two things that I caution people, or I caution, but advise people about. First of all, when it comes to doing one of these as the consumer, from the consumer's perspective, make sure that you're honest with yourself on what you're capable of doing.
We
Um,
talk this comes up in every conversation
hon-
about being honest with yourself.
I Every problem that I've ever seen, not every, but 90% of the problems that I see people have, it's because they're not really being honest with themselves. The times that I've had problems with myself was when I wasn't being truly honest with myself. So you need to make sure that you're capable. Are you capable of doing your own flooring? Are you capable of painting your own house? More so, when it comes to roofing or plumbing or things like that. When you say that you have a cousin that's a roofer that's going to help you with the roofer and they have a license, make sure you get a copy of their license, because maybe they're not a licensed roofer, maybe their boss is, and that's going to create a problem down the road for you.
Mhm.
So make sure that you're honest and the people that you're talking to are being honest. And lastly, it is remarkably stressful. The biggest problem that I have is relationships, or I will have a spouse call me at 7 o'clock in the morning screaming about something. And then 2 hours later, the other spouse call. And I'm not your guidance counselor. I'm not your marriage counselor. You need to work this. This is hard. It's hard to do. It is extremely stressful. There are deadlines involved that need to be met. You want to be aware of what your relationship is, you
We
know.
have a little joke that we say because we're investors and we have bought and we have friends that are investors. And the joke is if you want to have a fight with your spouse, buy a can of paint.
Right, right. You wanna get a divorce? Build a house.
Yeah.
Yeah. It is the ultimate stress test, I think, for relationships.
Mhm.
But if you're in a good relationship and you're confident in it, I've done it, you've done it,
Yes.
it can be done.
Yeah.
You just need to go in eyes wide open
Yeah.
and keep honest.
Great.
Any other questions?
I don't think so. I think that was very informative for me and for the general public. I think renovation loans are super underutilized, and I hope people listen to this podcast and take away that these are opportunities for them either as owner occupant or as an investor.
Absolutely. So listen, if you found this useful, please share it with a friend. Until next time, I'm Ed Marko.
And I'm Kim Von Dohren.
You have been listening to Brick by Brick. Be sure and subscribe, post questions for future episodes, or comment. This is a Super Squirrel production, Super Squirrel Studios, Stony Creek Mills, Pennsylvania.